In our today's video we are going to learn the impact of inflation on investment returns and purchasing power. So let's go. Inflation can have a significant impact on investment returns and purchasing power, both globally and in the context of India. Here's how inflation affects these aspects. 1. Investment returns. A. Fixed income investments. Inflation erodes the purchasing power of fixed income investments such as bonds and fixed deposits. When the inflation rate exceeds the interest rate earned on these investments, the real, inflation-adjusted, returns become negative. This means that the purchasing power of the investment decreases over time. B. Equity investments. Inflation can have a mixed impact on equity investments. On one hand, companies may be able to increase prices to keep up with inflation, leading to potential revenue and profit growth. This can positively impact stock prices and provide inflation-beating returns. On the other hand, high inflation can lead to increased borrowing costs and operational expenses, potentially impacting corporate profitability and, consequently, stock returns. C. Real estate. Inflation can have both positive and negative effects on real estate investments. In periods of moderate inflation, property values and rental income may increase, providing investors with potential returns. However, if inflation rises too rapidly, it can lead to higher construction costs and mortgage rates, making it more challenging for investors to finance real estate purchases. 2. Purchasing power. A. Consumer prices. Inflation erodes the purchasing power of money over time. As prices rise, the same amount of money can buy fewer goods and services. This can impact individuals and households, making it more expensive to meet daily expenses, save, and achieve financial goals. B. Savings and debt. Inflation can affect both savings and debt. If the interest earned on savings does not outpace inflation, the real value of savings decreases. On the other hand, if individuals have fixed-rate debt, such as mortgages or personal loans, inflation can reduce the real burden of debt over time. This is because the value of the debt decreases relative to the rising prices of goods and services. In the context of India, it's important to note that the impact of inflation on investment returns and purchasing power can vary based on the country's economic conditions, policies, and other factors. India has experienced varying levels of inflation over the years, and the Reserve Bank of India, RBI, sets monetary policies to manage inflation and stabilize the economy. It's crucial for investors in India to carefully consider the prevailing inflation rate, choose investments that have the potential to outpace inflation, and regularly reassess their investment strategy to protect purchasing power over the long term. Additionally, individuals should aim to strike a balance between savings, investments, and managing debt to navigate the impact of inflation effectively.